Have you ever heard of a business owner who's had lumpy cash flow syndrome? Well, if you have, then you're not alone. Maybe even you've gone through it if you've been in business long enough. Well, here's the truth is that we know that most businesses that come to us at the beginning have a lot of what we call like a roller coaster of their cash flow. It's up and down, it's super frustrating, super annoying, and really it's very demotivating as well when they're putting in so much effort and time and they look at it and they go, I don't have enough real bang for buck. I'm not really getting the income that I deserve out of this. So how do we fix that? Well, what we're going to do in this training is I'm going to take you through some really simple steps to help you to unpack and dissect the symptoms and the syndromes, and more importantly, how you can fix it. So let's get started with the trading. So let's go through the cash flow effect and what happens if you've got lumpy cash flow syndrome. Well, three big things that we see happen. First one is people feel like they're failing from an emotional perspective. They're stressed, they're tired, they're overworked, and they're feeling like they're underpaid. They're putting this lot of energy out, but they're just not getting the cash that they deserve back. And what happens is that the fact that they don't understand the language of business, which is numbers, what ends up happening is like they're playing darts in the dark. And what ends up happening without the cash flow is they just don't have the team. If they don't have the team that they can leverage with, then they're not able to ever leverage. They're never able to grow the business. They end up becoming the ultimate bottleneck in their business. And we want that to shift. So what's the shift that needs to happen here? To fix that, what we need to be doing is to really make sure that you're on the right path. And when you get the financial optics of the business dialed in, you know that things are working. You know that, it's like you're flying a jet fighter through clouds and you're going, hang on a second, I'm not sure if there's going to be a mountain on the other side and I'm going to get whacked, or whether it's going to be clear sailing when we get to the end of the clouds. The only way you can do that is to have a dashboard, to have an optics for you to fly with. So this is making sure that you're on that right path. Second thing is, when you know your numbers, you know that you're confident of the future as well, not just today. Hey, I've got enough money in the bank, everything's going to be fine. You look at it and go, actually, no, I actually know where we're going. I know we can predict the future because we can see the patterns and we understand how to read the numbers really well. And what that does is brings uber clarity. With the clarity that you have, it gives you a huge amount of confidence. You're building the cash, you're building your team, and then you're able to seriously grow your business. So what we're going to do is we're going to talk about one part. We're going to dissect this one little piece that is super important. We're going to talk about knowing the language of business, which is knowing some stuff around the different language and the different aspects around and terminology around business. So what we're going to do is we're going to do a little financial literacy test. It's an assessment. Let's see how you go. And there are 10 questions. They're pretty simple. Now, you'll have a workbook that you can flow off and answer the questions, or you can just watch the video and it will take you through this anyway. As I go through, there is one question and there are four potential answers. There's only one that is correct. So as I go through, the answer will either be an A, B, C, or D. All right, so here we go through. Let's do it. First one here. Let's go. Which of the following is a basic accounting equation? Net worth equals assets plus profits. B, gross profit minus sales equals gross profit margin. C, assets equals liabilities plus owner's equity. D, EBITDA equals COGS equals depreciation. So if you look at those there's only one correct answer, A, B, C, or D. Write down the one, I'll reveal which is the correct answer in a little while, but make sure you got that first one. Let's go to question two. Question two. Which would you find on a profit and loss statement? Depreciation, fixed asset, accounts payable, and repayment of debt. A, B, C, or D. Number three, a prepaid expense is an asset, owner's equity, a liability, or a payable. There's only one correct answer out of these. Okay, A, B, C, or D. Let's go to question four. Which is most important to the daily operations of a business? Assets, profits, cash, or sales? This might be a pretty easy one, but let's just see how you go with that. Only one correct answer on this. Next one, accounts receivable. Accounts receivable, money coming to you, is an asset, owner's equity, a liability, or a prepaid expense. A, B, C, or D. Accounts receivable is. All right, we're halfway through. You're doing a great job. Keep it going. Let's go to question six. Which of the following items is not found on a balance sheet? Cash, sales, assets, or equity? A, B, C, or D? Which one is not found on a balance sheet? Question 7. Which accounting system most accurately reflects profitability? Cash accounting, flow of funds accounting, accrual accounting, or general ledger accounting? A, B, C, or D? Let's go to question 8. When people speak about the break even, they are referring to what? Total revenue equals total costs with no profit or loss. Gross profit matches operating expenses excluding EBITDA, earnings before interest, tax, depreciation, amortization. C, sales revenues cover variable costs, not fixed costs. D, operational revenues equal direct costs omitting overheads. A, B, C, or D? Now here's a really important thing. This one here, this question here around your break even is unbelievably important. And what I say is, as the business is expanding, most people, number one, don't know it, but they don't redo it even if they have done. So super important that you know the answer to that question. Question 9. Is LIFO or FIFO a method of, by the way, that's not fly in, fly out. We're talking LIFO, FIFO. Is it a method of depreciation, calculating profits, financing, inventory evaluation? A, B, C, or D? What is the answer to that one? Question 9. And our last question here. Which of the following does not affect your cash position in running a business? The lease expenses, advertising expenses, depreciation expenses, or interest expenses? A, B, C, or D? All right, champion, go through what you've got now here. Make sure you do A, B, C, D. Now what we're going to do is I'm going to reveal the answers for you. So the answers to the 10 questions is question 1, which is the following basic accounting question. The answer is C. Question 2, the answer is A. Question 3, A. Question 4, C. Question 5, A. Question 6, B. Question 7, C. Question 8, A. Super important, that one. Question 9, D. And question 10, D. So what you're going to do is you want to add this up and calculate what was your score. Like how did you go out of 10? Now, if you scored something that you don't think is appropriate, if you're thinking, oh man, I got a 7 or below in the most important language you need to know if you're a business owner, which is the language of numbers, then don't worry about it. Guess what? Your business got to where it is today and you haven't got these tools into place. So it's like, wow, for me, I look at that and go, there's massive opportunity. If you're already at least kind of 8 or 9 or 10, you go, right, there's some areas I need to improve, but I've got some ideas around this, and you kind of go, I want to get some more insights, and that's fabulous that we can take you through. Now, whatever your score is totally fine, it's totally cool. I love this quote from Warren Buffett. I think it's very appropriate given what we just went through, and that is what he says, if you can't read the scoreboard, you don't know the score. And if you don't know the score, then how do you know the winners from the losers? And here's the truth, is most people don't know the score in their business, and they're not tracking. If they do, they don't track it consistently enough. So what I want to do is I want to take you through something that is critical in this, and this is the break even. And what I want to do is I'm going to show you a really neat tool that we use. Now the answer to the question here was total revenue equals total costs without any profit or loss. Okay, so with that in mind, let's jump in and show you the tool that we're going to use that help you to be able to do break even, do it really well and really fast. So this is what we call our break even calculator. It's a really simple tool that can add a huge amount of value and give some great insights into your business, not just around break even, but quite a few other things. So how does it work? Look for the time period, look at the last 12 months, you can pick whatever year that you want in there. And let's just say hypothetically that the revenue of the business is $800,000 in revenue. Okay, that's a revenue. What is the cost of goods sold? Now the way this works, if you see this little grayed out area, they're the ones that you fill in. The ones that are different colors, they'll automatically populate for you. Okay, what are the cost of goods sold? Let's say this business, hypothetically, let's say it's a $300,000 in the cost of goods sold. Bam, what it tells you is your gross profit. It tells you your gross profit margin. You go, hey, that's really cool. I'm good with that. That really helps me out with this. Then what we want to do is we then look at what are the fixed expenses. So when you go into the fixed expenses, let's just say, and it gives you little cheats on this as well so that you can go in there and do, let's say the fixed expenses on this business is say 150,000. Bam, what it does straight away for you now is now told you what your gross profit margin is, which we did over here, but it tells you what we call your hard break even. What we do with a hard break even means this is where you're not making any profit, but you're not making a loss. Per year, you need to do, in this example here, at least $240,000. Now, if you put steroids in this and really get granular, let's just say we're going to calculate now how many days, or break it down to monthly, weekly, and dailies. These are some of the numbers over here. Here's how you can do that. Let's say you work, how many trading weeks do you work a year? Let's say you put some holidays in there. Let's say it's 46 weeks. And let's say that your store, your shop, your consultancy, your engineering company, your manufacturing company, let's just say you're open 5 days a week as an example. Then what it does here is it tells you now, it breaks it right down to monthly. Here's what your hard break even is per month, per week, per day. That means every day, boom, this is what we need to be doing. This is the revenue we need to pull in each day. So it keeps you and the rest of the team hyper accountable. And then if you really want to do some really cool things on this and break it up and get even further, then what we can do here is we can talk about, well, what do my marketing numbers need to look like to give me that result? What do the leads and the conversion need to look like? Well, let's just say your average dollar sale, for the purpose of this exercise, is $10,000. So with $10,000, it now tells you how many transactions you need to do per year, per month, per week, per day to be able to hit your hard break even. And then you go, well, how many leads, David, do I need to have to do that? Well, let's just say you're converting, let's say 2/3. 2/3 of your leads. And then it tells you, right, well, I need 36 leads per year, 3 per month, 1 per week. And because the number here is relatively small, it says 0, but that's because it's a fraction. And then it's going to tell you what your net profit and net profit margin is. Super cool, really easy tool. Guess what you can also do? You can reverse engineer it and go, hang on a second, I want this to be even higher. And then you can just change these numbers as you go, you do it in the backwards order, and it can tell you what my revenue needs to be to give this number here. So this team is one of the tools that we use as part of a bigger strategy to help you to understand where you're at in the business, so you've got a great optics on your business. So if this resonates with you and you want to put this strategy into your place, then what we'll do is we're going to offer a one-on-one free consultation where we're going to help you to implement it. We've got a saying here, and that is, when the tide comes in, all boats rise. And what we'll do in that consultation, it's called a growth driver call, is we're going to do 3 things. Number 1, get really clear on what your goals are, where you're going, what's your vision for the business. Second thing is looking at what are your bottlenecks, what are the things that we need to overcome. And the third thing is, what are the very specific next 3 action items that you need to put into place in your business right now. You're going to get huge value out of that. Not only that, but you might kind of go, hey, this is really great. I'd love to continue the conversation, and that's fantastic if you do. You're going to either win in this call, or if you want to work with us beyond that, we can talk about that after that call, but you can win even faster. It's just one simple step, and that is to click on the link and book your call now. Here's what we're going to do on our end. We're going to make sure we're well prepared. We're going to do our homework. We're going to do our research before we speak with you so that we can hit the ground running, because our job is to make sure that this year is the best year that you ever had. Can't wait to speak to you soon. Bye for now.